Hello friends, a very warm welcome to my channel. In today's video, we are going to discuss another very interesting company, which is IGIL, that is International Gemmological Institute of India. So this company is into diamond certification, both natural diamonds as well as lab-grown diamonds, and they provide lot of ancillary services like running courses, customized quotations, etc. as well. Before we begin, if you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. Here is a small disclaimer. This is not a stock recommendation. This is a stock picked up by the audience from the Telegram channel poll. I am a SEBI Registered Research Analyst and I or my clients may have positions in this stock. I might change my view on the stock based on the quarterly results or any major developments by the company. This is a crisp video, not a full-fledged analysis. So I'll cover only the important points in this video. This will be the flow of our discussion. We'll discuss the business model first in brief. We'll look at the charts, how the stock has performed since listing. We'll talk about the financial performance of the company. We'll see why the stock has fallen from the listing date. We'll discuss the outlook of the management going forward. We'll talk about the valuations of the stock. We'll understand the risks of investing in this business and then form an overall view on the company. So IGIL is a part of the global network called Global International Gemmological Institute, and India is the biggest market for them. So IGI is one of the world's largest diamond certification or gem certification organization, and it has 33% global market share, 50% market share in India, and 65% market share globally in case of lab-grown diamonds. Now, what are the different services which they offer? They offer gem certification, which could be diamond or any other gem. They offer grading services. They do certifications for loose diamonds as well as jewelry. And their customers generally are the manufacturers of diamonds, the wholesalers, the retailers, as well as customers, the retail customers. Whenever they have a doubt or they want the certification to be done, they approach such institutes. So what is important in this business is the trust which they have, that it brings in very high entry barriers to this business. People don't believe you and me certifying a diamond, but they believe organizations like IGI. So building that kind of a trust over decades is the entry barrier in this business, which is huge. For exporting Indian jewelry, the credibility is important. There IGI comes into picture. So they have expertise in both natural as well as lab-grown diamonds. And they have responsibility towards the customers buying the diamonds because there's a lot of belief which people keep on such organizations. These are the different revenue streams which they have. They get grading fees for the diamonds which they do grading. For large institutions, they also customize and give detailed reports. They do laboratory testing. They also do consultancy for organizations. They also do training and coaching. If somebody wants to learn certification of diamonds, they have their own schools and institutions. So these are the different streams of revenue for this company. As we discussed, they have 50% market share in India, 65% of the global lab-grown diamond market share, and 33% for the natural diamonds. So it's a huge organization and kind of a duopoly, majorly duopoly kind of a market. It's a high cash-rich company with high return ratios. The growth historically in the last 5 years have been very impressive. Globally, they are present in 10 countries. They have 31 labs across the globe and more than 7,500 customers work with them. In India, if you look at the organized jewelry chain, 9 out of 10 jewelry chains work with IGI. They have presence globally. India is the largest market for them. Other than India, their head office is Belgium. Then they have presence in United States, Italy, and many other countries. As a company, what are the major costs for them? The infrastructure, the equipments which they have, that's their major cost. They need very skilled people to do this job, so that's another major cost for them. And they have a lot of affiliations with different brands, that is another cost. The company came out with an IPO recently with an IPO price of 417 and it made a high of around 650. At that point of time, it was very expensive in terms of valuations, and that's why we saw a sharp correction towards the range of 300, and now it is trading at around 350 rupees. So the stock has entered now in a consolidation phase post the correction. Now coming to the financials, the last 4 years, the company has shown steady growth in the revenue. They did about 365 crores. They follow calendar year. So they did in CY21, 365 crores, which went up to 785 crores in the December ending 24, which is CY24. So there has been a steady growth in the revenue. EBITDA wise, they've grown from 241 crores in CY21 to 572 crores in CY24. So the profit growth has been faster than the revenue growth. Why? Because there's a margin expansion seen. They did 66% EBITDA margins in CY21, which increased to 73% in CY24. Now people also have a thought whether this margin may compress going forward because lab-grown diamonds are cheaper when compared to natural diamonds and their certification costs will be lower. So it is more of a volume game than a value game. So people are concerned that the margins may compress going forward. That is one school of thought. The promoter holding is still above 75%, so there could be further dilution by Blackstone going forward. That will be an overhang on the stock. Free cash flow wise, it's a very strong cash generating business, and the return ratios, the ROC, ROEs are also very strong, about 20-30% for this company. Now, when everything is so good about the company, then what led to the fall in the stock price? The valuations at a price of 650, which the stock was trading earlier, became very expensive for such a business. So there are two angles in which you can look at these businesses. One thing is it's a high entry barrier duopoly kind of a business where a new entrant may not enter so fast. The market share is very high, about 50% in India. But on the flip side, as they have a share of about 50%, that means there is not much share left to capture from the competitors. So what I mean to say is their growth will be similar to the growth in the industry overall. So the growth will not be very exponential from these kind of levels unless the industry also grows at exponential level. During the IPO, the company had high hopes of growth, but post-listing we have observed in Q4, they have grown only 3% year on year, which was a disappointment from an investor's perspective. And the market sentiment has also been weak. That's also led to the fall in the stock price. Before we move forward, if you're not a part of our Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day morning before the market opens, I share my view on the market. I also share how I am allocating cash and stocks in my portfolio. So these kind of strategies will help you increase your portfolio returns as well. What is the growth outlook of the management going forward? They're not giving any specific growth numbers, but in general, they are saying that they are very optimistic about their business going forward. They're seeing good growth in the lab grown diamond segment, which I don't agree fully, because in the short term, you may see growth, but in lab grown diamonds, as the value of the diamonds is not so high, going forward, as the value of lab grown diamonds further goes down, people may not really spend money on certification per se, because that will be a high cost compared to the overall cost of the lab grown diamond. Then as people move to buy jewelry from the branded chains, they prefer to buy hallmark jewelry. So these kind of trends also increase business for this company. When people want to buy jewelry online, they are very particular about such certifications. The company with the IPO funds spent about 1350 crores and acquired their regional businesses of Belgium and Netherlands. So now they will consolidate those businesses as subsidiaries in this main Indian entity. And they will turn around those businesses as their businesses were not performing so well in the past. So this is what the company says, but how well they do it is a question again. So post acquisition, what will happen to the overall structure of the global company? So IGIL will become the global parent, which was Belgium earlier. Now Netherlands and Belgium will become subsidiaries of the Indian entity. And as all the trademarks and the licensing rights are held by IGIL Netherlands globally, now that has become the subsidiary of the Indian company. So Indian company will also receive the brand licensing fees, the trademark fees from all the global affiliates, franchisees, everybody across the world who are using IGIL's licenses. So now Indian company will be the major or the headquarter company, and all the other companies will be under this network. In general, if you see the jewelry market in India, it is expected to grow at 20% CAGR, which is a good number for the next few years. Globally, India is having 95% of the market share for the diamond polishing. 35% of the entire lab grown diamonds produced globally are made in India. Out of the total certification which happens across the globe, 60 to 70% happens in India. And out of the lab grown diamond certification, close to 75 to 80% happens in India. So India is a major market for them. Now coming to the valuations part, post correction now, the stock is trading at somewhere around 35 times the earnings. Market cap to sales is about 20x and price to book is about 7x. So although the valuations here look reasonable, but a lot depends on 2-3 factors going forward. The first one is whether they will deliver the growth which they've been promising, because Q3 was a disappointment for us. Secondly, how well they turn around the companies which they have taken over, and post consolidation of these financials, when they post the consolidated financials in the coming years, how are the financials shaping up? By looking at them, we'll get to know the right valuations and the right growth of the company. It is too early to judge how the consolidated financials will look like going forward. Now, what are the risks of investing in this business? At the time of IPO, a lot of people questioned this company, that the other entities which this company is taking over are not so good performing companies. Then why are you taking them over? Why are you paying 1350 crores for such entities? So the management justified saying that we want the entire business under the Indian entity, we want to consolidate, and we want to make the operations more efficient. These kind of answers were given as justification by the management. And the IPO also was subscribed pretty well. But there is also a question in people's mind whether this IPO, which was majorly an OFS of about 2750 crores, Did this IPO act as an exit to Blackstone for the other entities? Because the acquisition which happened of 1350 crores was taken over from Blackstone. So that is a question in a lot of investors' mind. If there is an overall slowdown in the diamond industry, that could be a business risk for this company. And going forward, as the company gets more business from the lab-grown diamonds, will there be a margin compression is again a question. So these are major risks of investing in this business. So now that you've understood the business model of the company, you've understood the growth prospects, the valuations, the risks, what is our overall view on the stock? If you're already holding this stock, I would urge you to closely monitor the performance going forward. And if the performance is satisfactory, then only you should hold. Otherwise, you should exit. And you should give the company some time to see the numbers of the next year before you take a call. And if you're looking at a fresh entry, I would suggest you to wait and watch, see how the consolidated financials are coming for the upcoming quarters, compare year on year, see how the growth is coming with the increasing lab-grown diamond share, see the margins, and then take a call. So that's about IGIL. I hope you like the crisp analysis. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names in the comment section. Do join our Telegram channel by clicking the link in the description. Thank you for watching and have a wonderful day.